candlestick patterns. So in the last section, we've seen all the tools we use to analyze the markets, but we need to complement this analysis with secondary analysis, we'll call it. And candlestick patterns is a great tool for that. So let's look at it. So basically, we've seen patterns like wedges, triangles, head and shoulders, and you've got sort of the same. They don't look the same, obviously, but with candles. So candlestick patterns. And so first of all, what you need to understand before everything is so that the price, let's look at this. Here, a bullish candle goes up, price opens here, closes here, went all the way up to there, all the way down to here, depending on the time frame you've chosen. All right. So a few things to know is that candlestick patterns have more impact the bigger the time frame. So if you see a lovely dragonfly or something on a weekly time frame, or even monthly or daily time frame, it will have a lot more impact than if you see one on the 5-minute charts or something. So, but if you're trading on like a 1 hour or 4 hours, which I do a lot, candlesticks are still useful. But if you see on a daily chart a lovely, clean shooting star, spinning top, or whatever candlestick pattern, it indicates a much stronger signal than on a smaller time frame. Because, as you know, so a candle takes into account the time frame. So the bigger the time frame, the more data the candle takes into account. So yeah, so a good thing to know. And also a good thing to know is that you need to look at wicks as little, let's say, little detectors, you know, like on worms or something. They've got these detectors that prevent them from going somewhere. We need to see wicks as the same thing. So, for instance, a candle that's got a really long wick at the top is basically as if it went all the way up, tested here, and thought, oh shit, we're not going there, and goes back down. So it's like testing the temperature of the water with your foot. Basically the same. You need to look at it like that. So it went all the way up, straight back down. So that means sellers are pushing the price. Same here, you can see, went all the way down, tested that level, didn't like it, straight back up. So you need to look at it like that. You need to see in each candle pressures. So you need to see here, you've got bullish pressures. Every time it's going back down, it's pushed back up. And yeah, every time like here, we can see there was a lot of selling pressure with every time trying to get back up, testing these levels, it's being rejected. So yeah, keep that in mind. And basically that's like nearly all you need to know for candlestick patterns. Just I'll show you the different ones. So the first one is a Maribozu, which is this, bullish and bearish Maribozu. So they are simply full candles. So price opened here and closed here. So that indicates a really strong move, as you can imagine, because there was no low or high. Basically, it opened at the low, closed at the high. So that means in this time frame, there was only buyers. So it's a bit like this one, but that's not a Maribozu. You can see there's a little wick. So where Maribozus are really interesting is when, let's take that drawing tool. You've got, let's say, a wedge. All right, wedge. So you're waiting for a break down with the MPO to look where the price is going. And when the price, the candle breaks, if it breaks into a Maribozu, which is a full candle, that means there's a lot of selling pressure on this breakout because it's a really powerful breakout. So yeah, so Maribozus are extremely interesting in breakouts and in tops. Like if you see a Maribozu going back down on the support or resistance. Then the next one is the spinning top. So here the same. If you understood what I said earlier about the pressures, you can imagine what that candlestick does. So basically, price opened here, closed here, but during that time went all the way up, tested that level, was rejected, also tested that level, and was also rejected. So that suggests indecision in the market. All right. So you see a lot of them at tops and bottoms because it shows that the market is indecisive, indecision. So we've got one here, for example, that's a lovely spinning top. And let's see, that was a spinning top as well. You've got many, really. So yeah, so spinning tops indicate, here you've got one as well. Spinning top indicates indecision in the market. Then we've got shooting star. So here, what did I say? Testing these levels, shooting back down. this is a bearish signal. Bearish signal. So that's a shooting star. So you'll see many. So like that's a shooting star. You can see went all the way up, straight back down. Lovely shooting star, which is a reversal pattern, which indicates bearish pressure. Then there's the hammer, which is basically the exact same as the shooting star. However, it's the opposite. So it's basically testing the depth, but on the low side. So I don't know if there's one. Yep, here we've got one. A lovely hammer. You can see price opened and closed approximately at the same price at the top, and then tested down here. So that's the hammer. Then we've got the dojis. So the dojis are like the most powerful, let's say, reversal patterns because, well, you understand now, I think, with the different pressures. For instance, this one is the exact same as a spinning top. It's just more powerful. Its price opened, went all the way up, all the way down, and closed at the exact same price. Right? The gravestone is similar to the shooting star, same, but simply closed at the same price, so even more powerful. And the dragonfly is sort of the same as a hammer. And these are indecision patterns, so not bearish or bullish. So yeah, so let's look on the market. Here we've got some dojis. So yeah, by the way, no need to know like the names, the gravestone or dragonfly. They're good to know if like you're reading Forex articles. But yeah, in your analysis, there's no real need to know the names. So here we've got dojis. That's more of a shooting star, yeah. That's a doji as well, here too. So you can see many dojis really. And they are powerful. That's a lovely one as well. So that would be a dragonfly. See? I can't remember why they call it a dragonfly. Yeah. It's basically, normally the price goes down like that. That's the theory, of course. And then you've got a dragonfly, just like this, then goes back up. So apparently it's supposed to make a dragon. But yeah, so maybe a good way to memorize it. And yeah, so these are dojis. So these are single candlestick patterns, so just one candle. So there's double and triples. I personally don't use the triples because I've tried to use them, obviously, but I find that they don't work, so I won't show you them. So there's the double. So basically the doubles are bullish and bearish engulfing. So the bullish engulfing is when there's a bearish candle in the downtrend, for example, and there's a bullish candle that engulfs the previous candle. So takes all of it, eats it, sort of. And the bearish candle is, well, the exact opposite, but the bearish way. And so what you need to think behind this is that, let's say this is, you are on the 1 hour time frame, sorry. So each candle represents 1 hour. Now, if you go and you see a bullish engulfing, okay? Now you go on the 2 hour time frame. What do you think you'll see? Well, simple. Price open here, close here on the 1 hour. So on the 2 hour, the price will open here, and you can see in that hour it closed there. So it means it opens here and closes here. So it means if that's 1 hour, 1 hour, well, the 2 hour will basically open here, close here. So it will look exactly like this. So yeah, what can you see here? Some bullish pressure. All right, bullish pressure testing the water here. So it basically makes a sort of a hammer. So that's a bullish engulfing. Bearish engulfing is the exact same and would make shooting star if you double the amount of the time frame. So, but no need to change the time frame. Obviously, that's why we're looking for engulfings. So this is a lovely bearish engulfing. You can see it engulfed the previous candle and continued its way down. Let's look for another one. This is a lovely bullish engulfing. It's specifically when it gaps, because basically during the weekends markets are closed, so the price can open at a different price. So you can see there the price opened here, closed there, and then next week, because I'm on the weekly chart, the price opened down there and closed up here. So that's like the proper engulfing, like that's the textbook engulfing, but you rarely see them. So that's bullish and bearish engulfing. And then there's the tweezers. So basically the tweezers is the same. It's basically a double confirmation. It's the price. Let's look at this one, for example, tweezer tops. So the price went up, rejected, then it opened, went up, rejected again, and closed at same price that it opened before. So in this case, you can see that's a bearish candle, the black one, followed by a bullish candle, and it's a bullish candle followed by a bearish one. So I don't think we'll see one on pound Aussie weekly, probably not. Okay, well, I've been looking for tweezers in the markets quickly. I can't find any. So yeah, but basically I think you get the picture of the tweezers. So these are the candlestick patterns you need to know. And they will complement our analysis, you'll see. We'll use them a lot. And yeah, specifically, you need to understand this idea of pressure, that the wick is like a toe testing the temperature of water or something. Okay, so yeah.